my name is James Nicholson and welcome to my YouTube channel. Now, we like to share lots of different data sources. Yesterday, we did a video that we looked at the US inflation and it's gone back up, which is not a good sign because normally the UK follows the Fed and that's what we're still expecting to happen. So with American inflation going up, that means that rate cuts in the USA are less likely. In fact, a lot of places were saying that they don't see the first rate cut actually happening now until after the American election on November the 5th. I think the Fed meeting that month is on November the 6th. So it could literally be the day after the election. Now, because the Fed and the Bank of England are not going to want to be seen to be political. They're not going to want to seen to be giving the party in power a rate cut in order to help them stay in power. So it's a difficult one to balance. Now, in this video, I want to talk about economists in the UK and what they're expecting to happen with UK inflation, because it's actually looking slightly better than our American counterparts. So before we jump into this, as always, if you haven't done already, do subscribe to the channel over there and hit that bell notification. We're on the way to 25,000 subscribers now. And while you're here, smash the like button, tickle the like button, do something to that like button over there. That really helps with the YouTube algorithm. We want to hit 5 million views this year, and you can really help us by doing that. So what is going on? Well, the UK inflation is actually looking slightly better. And this is mostly based off the energy costs. In the last few weeks, gas has actually come down significantly in the wholesale market. Now, the reason for that is the UK and the rest of Europe, they have reserves. So we've got through the winter and we've got 59% left in our energy reserve, which is pretty good. Now, we'd normally top that up to 90% by November, but it's looking like that we'll probably have it topped up to 95%, so higher, by September. That means we won't need to buy in so much energy, and that means that wholesale prices will likely to continue to go down, which is really, really good. SSE is one of the big energy providers that are dropping their prices by 22% in the next few weeks. And so that is going to mean a big drop in consumer costs. Now, these energy costs have been a real driver in inflation because everything revolves around energy. You've got to get food manufactured, that uses energy. You've got to take that food to the supermarket, that uses energy. You've got to heat the house that you live in, that uses energy. Your office or wherever you work, that uses energy as well. And so it's something we couldn't really avoid. But it looks like people have cut down their consumption over the winter this year, meaning our reserves are slightly higher and we bought more in. We were more prepared this time than we were the winter before. So Capital Economics, as well as ING, they are forecasting that UK inflation is going to do significantly better. Now, remember, we peaked at 11% our inflation, and that was a 41 year high. And it's been really, really brutal for a lot of people, especially people on lower incomes, because food and energy were things that went up and they can't avoid. You need to buy food, you need to have energy, you need to keep warm, especially in the winter months. And it really hit a lot of people very, very hard. Now, because energy costs are coming down significantly, food is not rising as much anymore. The real concern we've got to watch is on the service sector. That's the sector that worries the Bank of England the most. And so these guys at Capital Economics and ING are saying that they feel inflation could be 1% by this summer. They think that we'll be below 2% next month. So they feel that the April data that we're going to see in May will show that we are below that 2% target already. That is going to start putting a lot of pressure on the Bank of England to drop rates. Now, a lot of this is also going to depend on what happens in America, because we don't want to mess up our currency, but it will kind of put more pressure on, regardless of America's inflation. Let's just say America stick at 3% for a long period of time. If we start getting down to 1%, it's going to be really hard for the Bank of England to argue to keep interest rates higher. Their job is done. Not that I feel that the interest rates actually did much. When we looked at yesterday's inflation data for America, the biggest driver for American inflation was rent. Rents were up significantly. Now, this is a channel about property investing. The rents are rising in the UK as well. That data is also included in our inflation data. Rents are up around 10% this year, and that is included in the inflation data that you're seeing right now. So what you're seeing is higher rents. Higher rents have been caused by mortgage interest going up. Mortgage interest for landlords, for a lot of landlords. I had one deal that went from a 1% deal to a 4% deal. That meant that my mortgage payment went up 4 times more expensive. So in that instance, we needed to increase the rent. And there are millions of landlords, or hundreds of thousands at least, that are in the same situation. The mortgage interest rate significantly increased. That got passed on to the tenant through a rental increase. So by pushing interest rates up, they kind of pushed this inflation and continued this inflation, in my opinion, longer than we should have had. So ING Bank, what they're saying is they feel, regardless of what happens in the USA, regardless of what happens, they feel there'll be 4 interest rate cuts this year in the UK. ING are a big bank. They know what they're talking about, but no one has a crystal ball for sure. But it is interesting to see. We've got our inflation data out next week on the 17th, I believe it is. So it's going to be really interesting to see how we differ from America. The energy prices are going to be more significant in our inflation data in this month than America. America is more energy independent than we are, so their inflation data is made up of other stuff. And so this could be a big drop this month or next week, even in inflation data. When the Americans are going up, hopefully we're coming down, and hopefully that means the Bank of England start to be brave, start to take some action, because if they over-restrict, which we're in restrictive territory right now, it is causing people pain right now. The higher interest rates, it's causing rents to go up for a lot of people. That isn't necessary, I don't feel, at the moment. I think we could look at gradually, not cutting from 5.25% down to 2%, but we could at least go down 0.25% in the next few months and start moving it down gradually as inflation continues to go down. That's what's going on in the market right now. So the analysts, the economists are saying inflation, in their opinion, UK inflation is going to get 1% by the summer, 2% next month, and 0.5%, which I missed off, 0.5% by year end, which is crazy. Where do you think that's going to end up? Because the Bank of England have been telling us inflation is going to go up. What do you think is going to happen? Comment below. Do subscribe to the channel. Do smash the like button. Go and check out some more content on my channel, including this video right here.